Hello investors, I'm Alex and welcome to my channel. In this video, I'm going to talk about 3 Buffett holdings that you can consider investing during this economic downturn. Hello investors and welcome back to my channel. In this video, I'm going to talk about 3 stocks that Warren Buffett has, and personally I think these companies would be a good bet during this economic downturn, and honestly I think these companies would perform well during the long term. I'm going to be giving you my personal opinion, and basically these are stocks that I own in my portfolio, and this is why I dare to recommend these stocks to you. So let's start with the video. So the first Buffett stock that I'm going to talk about is Apple. Apple is a solid investment and it's one of Berkshire's top holdings. Buffett's given the company high praise and saying that the stock is probably the best business that he knows. Apple shares are up around 45% in the past year. Investors also earn a modest but growing dividend yield of 1%, but that doesn't mean that the company is giving up on increasing its sales. Also, the tech giant recently launched the iPhone SE, which at $399 is a budget-friendly smartphone that's earned rave reviews early on. It's perfect timing for the cheaper phone, which can be an attractive upgrade option for consumers who aren't willing to shell out hundreds more for a top-of-the-line phone, especially with so many people unemployed or underemployed as a result of COVID-19. Right now, Apple's coming off an underwhelming year in which both its revenue and profits were down from the prior year, and unfortunately 2020 might not be much better given that the company is struggling, but over the long term, the stock is one of the more stable ones that investors can put in their portfolios because it's a safe bet to recover from this downturn. And finally, as Apple moves more towards services, including Apple Music, Apple Pay, the iCloud, and the Apple TV Plus streaming service that was launched in November 2019, it will be easier for the company to achieve incremental revenue growth as its subscriber base grows. Last fiscal year, server sales grew by 16% from the previous fiscal year, and over the 2 years, they're up by 42%. In fiscal 2019, they accounted for 18% of Apple's total sales, compared to 15% in the previous year. Investor, if this is the first time you're visiting my channel, consider subscribing. Another Buffett stock is Procter & Gamble. This stock is another Buffett stock that's done well over the past year. It's up 10%. While its returns pale in comparison to Apple's or other companies, it offers investors something those other stocks don't and that Buffett definitely loves. Also, an above average dividend that gives tremendous growth. For example, on April 14, P&G increased its dividend for the 64th year in a row. This dividend king now pays shareholders a quarterly payout of 79 cents, which is 6% increase from 74 cents, which was paying previously. Investors now enjoy an annual dividend yield of 2.7%. The average S&P 500 stock pays around 2% a year in dividends. And finally, another reason why P&G is a great buy is that this company's wide range of personal care and baby care products and many other day-to-day essentials. Procter & Gamble released its third quarter results on April 17 and noted that it's seeing strong demand for its products in North America and Europe as a result of the pandemic. Its organic shipment volume was up by 6% from the prior year quarter. Just to mention, Berkshire's portfolio first included P&G in 2005. Back then, the company acquired another Buffett stock, which is Gillette, for $57 billion. And currently, Berkshire owns $37 million worth of P&G stock, making it one of Buffett's smallest holdings. Another Buffett holding is Costco. Buffett and his partner, Berkshire Vice Chairman Charlie Munger, have long been fans of this company, Costco Wholesale. Berkshire bought stock in the warehouse chain back in 2000. The shares it held onto are now worth more than $1.3 billion. This company, Costco, has been a highly profitable investment for Berkshire, and it's likely to continue to reward investors in the years ahead. The discount retailer has enjoyed strong sales during the COVID-19 pandemic because many shoppers have turned to Costco to stock up on food, cleaning supplies, and other household essentials. So they're likely to continue to do so for the remainder of the pandemic and thereafter. Also, Costco's membership model gives it a powerful advantage over other retailers. Once people pay a membership fee, they have an economic incentive to maximize their investment by conducting as much of their shopping at Costco as they can. Costco makes it easy to do so by pricing its goods and slightly above cost and choosing to make the majority of its profits from membership fees. Low prices entice more people to become members, which leads to higher profits. It's a powerful formula that has propelled Costco's growth for decades, and that should continue to fuel its expansion for many years to come. Investors, if you enjoyed this video and you feel it was valuable and teaching you more about investing in the stock market, hit the like button and please share the video with your friends and family so that more people can benefit from its content. And if you want more investing content, please subscribe to my channel. Thanks for watching.